Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing jargon of Wall Street and tell you what it actually means for the companies we all care about. Today we're diving into HPS Corporate Lending Fund, and let's just say they've been busy tweaking their borrowing power, and we're going to unpack what that means for their financial muscle. Before we jump in, if you love getting straightforward insights from these corporate filings, make sure you're subscribed and ring that notification bell. Also, we've got a fantastic community over on Discord where we break down these reports even further, so do yourself a favor and join us there. The link is in the description below. And what that means for their financial muscle. Before we jump in, if you love getting straightforward insights from these corporate filings, make sure you're subscribed and ring that notification bell. Also, we've got a fantastic community over on Discord where we break down these reports even further, so do yourself a favor and join us there. The link is in the description below. Alright, so what are we looking at here? HPS Corporate Lending Fund, a company that essentially lends money to other businesses, has issued a current report, an 8K. Think of an 8K as a way for companies to quickly report any important events that shareholders need to know about right away, like a big deal being signed. The key date here is August 6th this year. That's when the main event we're talking about happened. Now, HPS Corporate Lending Fund, just to give you a little context, they're in the business of providing loans, often to companies that might not get loans from traditional banks. It's a bit like a specialized lending service. They're incorporated in Delaware, which is pretty common for companies in the US. The big news here is under item 1.01, which talks about entering into a material definitive agreement. What that really means is they've signed a significant new contract that could affect a company's finances. And that new contract is called a commitment increase agreement. Imagine you have a credit card with a certain limit and you get a call saying you can increase that limit. That's essentially what's happened here, but on a much larger scale and for the fund itself. This agreement is piggybacking on an existing deal they have, which is their senior secured revolving credit agreement signed back in June of 2022. A revolving credit facility is like a business line of credit that the company can draw from and pay back repeatedly. It's a flexible way for them to manage their cash. The other key player here is Natixis, New York branch, acting as the increasing lender. They're the ones agreeing to lend more money to HPS Corporate Lending Fund. And it's a multi-currency commitment, meaning the loan can be in different currencies, which is important for a fund that might operate internationally. So what's the actual impact of this agreement? It's increasing the total amount of money lenders are willing to provide under this credit facility. It's going up from $25 billion to $2025 billion. That's a bump of $75 million, the hours. But here's where it gets really interesting. This isn't just a one-time $75 million increase. This agreement is using part of what's called an accordion feature. Think of an accordion, how it can expand and contract. This feature allows the fund to potentially increase the total size of this credit line even further, all the way up to a massive $292 billion. This gives them a lot of flexibility to borrow more money in the future if they need it, without having to renegotiate the entire agreement. It's like having a pre-approved option to get even more funding. Now, because this is a credit agreement, it's considered a direct financial obligation. This means HPS Corporate Lending Fund now has a new or increased financial commitment that they are directly responsible for. Essentially, they've increased their borrowing capacity, which means they've also increased their potential debt. And as is standard practice, they've also filed the supporting documents. Exhibit 10.1 is the actual copy of the commitment increase agreement itself. This is the legal document laying out all the terms and conditions. Then you have Exhibit 104, which is the interactive data file for the cover page. This is mainly for electronic filing and making the information machine readable. Then finally, the signatures. This is where the company officially confirms the filing. Here we see Robert Bush signing off as the Chief Financial Officer and Principal Accounting Officer. He's confirming on behalf of HPS Corporate Lending Fund that this report is accurate and that they've made this commitment. So what does a $75 million increase in a credit line with the potential to go much higher actually mean for a company like HPS Corporate Lending Fund? On the surface, it looks like a positive. It means lenders have confidence in the fund's ability to manage its debts and that they see opportunities for the fund to grow or operate with more capital. This increased borrowing capacity gives them more firepower. They can potentially make more loans, invest in new opportunities, or simply have a larger cushion to manage their day-to-day operations. It's like a business getting a bigger bank loan. However, it's crucial to remember that a credit facility is a debt. While it provides flexibility, it also comes with interest payments and the obligation to repay the principal. The larger the facility and the more they draw from it, the higher their interest expenses will be. From a Warren Buffett perspective, we always want to see companies that are good at managing their debt. Increasing borrowing capacity is one thing, but actually using it wisely is another. We need to see if they are deploying this additional capital effectively to generate returns that are greater than the cost of the borrowing. If they borrow more to fund loans that don't pay off well, it could actually hurt them. The fact that they are utilizing an accordion feature suggests they might anticipate needing more capital down the line. This could be to capitalize on market opportunities that require significant investment, or it could be a sign that their existing projects are expanding and need more funding. It's a strategic move that gives them options, but it also signals a potential for increased financial leverage, which always comes with increased risk. For HPS Corporate Lending Fund, this move is about increasing their capacity to lend. It allows them to potentially take on larger deals or more deals simultaneously. This increased scale could lead to higher revenue and profits, but only if the underlying loans perform well. The market will be watching closely to see how they utilize this expanded credit facility and what kind of returns they can generate from it. It's a vote of confidence from lenders, but the ultimate success hinges on the fund's own investment strategy and execution. So to sum it up, HPS Corporate Lending Fund has expanded its borrowing power significantly by increasing its credit facility. This gives them more financial flexibility and the ability to pursue larger opportunities. However, like any increase in debt, it comes with risks, and the key will be how effectively they use this new capacity to generate profits that outweigh the cost of borrowing. Alright, that's our decode of HPS Corporate Lending Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this increase in borrowing is a smart move or a risky gamble? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. And as always, don't forget to check out the Discord community in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next decode.